Lake Resources CEO and Managing Director David Dickson joins me now to talk through the latest developments at the company's flagship Kachi project in Argentina's Lithium Triangle. David, thanks for joining us.
Thank you, Jonathan. Thanks for having me.
It's a pleasure, David. Now, before we get into the latest news, can you remind us of what you're trying to achieve at Kachi and talk us through the importance of the technology that you're using there?
Yeah, so what we're trying to do, Lake Resources, what we're trying to do is obviously develop a lithium project in Argentina. Our main project is the Kachi development in the province of Catamarca. Our ultimate aim and what we based our DFS or definitive feasibility study around is ultimately a mine that will produce 25,000 tons of lithium carbonate battery grade per annum, and that's extracting lithium from brine utilizing DLE technology.
So you mentioned you're in Argentina, you're in the Lithium Triangle there. How important is that location to the company?
Extremely important, and then when you look at longer term, lithium supply and demand, and you look at where the supply is going to come from, is estimated that over 50% of lithium in the future could come from what is known as the Lithium Triangle in Latin America. So that's Chile, Argentina, and Bolivia. So it's extremely important that these projects are developed. I mean, today there's a huge reliance on Western Australia spodumene projects, but as time progresses and we look at the challenges around supply and demand longer term, certainly not today as what's obviously showing the spot price of lithium today, but certainly longer term when you look at the deficit that's forecasted 2030 onwards, is lithium from that triangle in Latin America is going to be super critical.
David, with all that you're doing, you're in the midst of a capital raise. You've raised 15 million. How are things progressing on the capital raise and where will the money go to?
Yeah, so overall, we're looking to raise a total of $20 million. As you said, we have now raised the first $15 million of that, and that was done through a placement using our capacity, our available capacity, and that was supported by a number of institutional shareholders and a number of retail shareholders, and that was supported by the good work done by both Barrenjoey and Canaccord. The remaining $5 million we're looking to come from a share purchase plan, which is available to existing shareholders, and that's currently ongoing at this time. We actually, yesterday, we extended the time for people to participate, mainly driven by, we realized we put this out during what is an important break, Easter break, and with obviously a number of people on vacation. So we actually extended it out to the 18th of April, but we're looking for the balance of the $5 million to come from this share purchase plan. But the good thing is the first $15 million of that 20 has already been done.
And David, where will the money go to?
So the money is to be used for supporting the company to take us through into early 2025 to achieve the next milestone, and that is securing a strategic partner or partners who will come into the Kachi development to help us move forward on the equity side, and then obviously that'll help us raise the debt, and then hopefully move to a final investment decision sometime closer to middle of 2025.
You will raise the $20 million, there's probably no doubt about that. But so you've also got support from the export credit agencies of the United Kingdom and Canada. What does that mean for the project as well?
Yeah, so I mean, two important things here is we look at the cost to build this project, and in our DFS, we told the market that our estimated capital cost would be about $1.38 billion. So when you look at how do you fund a project like this, is you got to look at both equity injection and then debt, right? So what we're doing in the strategic partner process is obviously looking for a partner or partners that can come in to really satisfy that part around the equity. Now, On an equity debt ratio, we're looking at 30% equity, 70% debt. So on the debt side, we're being supported today by two export credit agencies. That's UK, which is out of the UK, and EDC, which is Canada. And with the support of these two export credit agencies, is that they'll then support the debt side, and then they'll be supported by two very large banks, and JP Morgan and Citi, who will actually syndicate the monies to provide the debt element of the project. So that's why it's important that we have a partnering process that's successful, and then obviously that allows us then to move forward and on the debt side of it.
And David, I'm just curious. We've spoken to a lot of lithium companies over the course of the last few months, and obviously lithium has come off a little bit, but there's optimism for the back end of the year. Do you see that as well? Do you see that optimism?
Well, my focus really is where does lithium pricing from 2028 onwards? Because if you look at the Kachi development, we may start production at the back end of 27, but really ramping up in 2028. So if we look at where lithium markets are, we're really looking at where lithium pricing is going to be in 28 onwards. And particularly when you look at the data that's out there today, the deficit, the supply-demand deficit is still there. I mean, if you look at some of the lower end projections of lithium demand by 2030 onwards is 3.4, 3.5 million tons per annum. Today, the world's producing around about 1 million tons. So somewhere between now and 2030 is that there needs to be more than treble the production of lithium. So the challenge today is obviously lithium stocks are being hit by lithium price and spot price than it is today. But our focus as a company is if we look at the economics of Kachi, we're focused on 2028 and onwards.
So David, just finally, the investment case. If investors are looking at Lake Resources, what are they looking at?
Yeah, I mean, obviously, lithium stocks across the board are obviously at significant lows from where we were, a year or 2 years ago when obviously lithium pricing was a lot higher. I think if you look at Lake today, what's important is last year we developed a DFS, which confirmed a number of things. One is the economics of the project really stack up. The two, what we developed as well was the technology. So there has been a lot of concerns around what is DLE and how does it work, is that we spent a lot of time with our demonstration and pilot plan showing that the technology works. And we actually, put something like 5 million liters of brine through our facility, produced over 200,000 liters of lithium chloride, and converted some of that into, today we have something like 1,300 kilograms of samples of lithium carbonate, battery grade, above 99.5% purity, right? So that was important as we developed that. The second thing about Kachi, which is interesting, is, we developed a reservoir to prove for 25,000 tons of lithium per annum for 25 years. But when you look at actually the size of the reservoir, or the salar, it has a huge potential to obviously to be developed further. And so originally the company, before I came in, was looking at more 50,000 tons per annum and above. We set the DFS at 25,000 tons, really driven by capital needs and capital requirements. But if you look at Kachi itself, it has the ability to expand significantly. So from an investor perspective, you look at today as obviously lithium stocks are rock bottom, and people ask me, well, what moves Lake stock price? Well, obviously lithium price will obviously move it. But certainly as we look through the year, the success of our partnering process is going to have obviously a major impact on the company.
David, we look forward to seeing what comes next, and thanks for your time.
Thank you, Jonathan. Thank you.